Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. Into this video, I want to speak about USDJPY because we do have quite interesting price action and structure. Starting here from the monthly time frame, in fact, we can notice how during this move to the upside, the market created only one candle which is not related to the move, which is exactly this red candle here. Now, since this candle was created, it means that when the market was testing this zone, it actually started to find resistance. And previous resistance, once it is broken to the upside, is turned support. So what we have here is previous resistance turned support, which the market is supposed to be attracted to, and at least the market is supposed to test before then potentially rejecting it to the upside. So in a situation like this, we can see that it is not a surprise that the market started this move to the downside, because we do expect a retest of this previous resistance turn support before then more bullish continuation. Now, if we drop down on the weekly time frame, what do we see? From a weekly perspective, we can see how the market just printed a nice impulse and currently started a correction. In general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can notice is that the 0.618, which is the golden ratio, or in other words, the Fibonacci level to which the market most of the times creates a correction to, is aligning up perfectly with the previous resistance turn support, creating a confluence of support at this level that there is good probability that the market will try to go and test. So USDJPY at the moment from a weekly perspective is looking quite good. We could expect a correction to this zone before then a potential move higher. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can see how the market has created this M pattern, then completed it at the neckline and printed a continuation lower. Now, this is exactly what we expected. In fact, I made a full breakdown of USDJPY after the creation of this M pattern. I made a full breakdown explaining why we expected this move to the upside and completion at the neckline. And then after the completion, I made another breakdown explaining other reasons for which we expected this rejection lower for the completion of this impulse correction and impulse pattern to the downside. And by the way, I will link in the description these two previous analyses so you can go and check them out for more free education. Now, if we go and see what we have when it comes to the COT data, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market are doing, and we check the data for the JPY, we can see how lately with the last reports, net positions have been decreased. We went from minus 59k to minus 61k net positions with 3.1k shorts added with the last report. However, it is very important to keep in mind that anyway is already two reports in a row that instead of seeing longs getting closed, we're seeing longs getting opened. So what this indicates is that in the long term, the JPY can definitely continue to be weak and the market can continue to create the continuation that we have already identified that we expect the market to create by looking at the monthly time frame. But in the short term, we can expect some JPY strength, which is in fact making USDJPY create this move to the downside. So what we could expect here is first a retracement and then a continuation lower for the market to hit that confluence zone that we have just identified on the weekly time frame. That is basically this one here, where the 0.618 golden ratio Fibonacci was lining up with previous resistance turn support. So what we could expect is first a correction and then continuation lower to go and test that target. Specifically, we would like to see the market provide a correction at least to the 0.32 Fibonacci taken on this daily impulse before then printing the continuation lower. So if the market will actually provide a correction here, how we could be approaching this potential continuation lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data. Those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com, in which you have access to my entire course, rules of the strategies, and you also have the possibility to access one-on-one private mentoring, basically video calls directly with me, VIP market breakdowns with Telegram signals, the COT data software, which is exactly the one that we have currently just used, the trading station software, which puts everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that I'm currently running a special promotion since I have partnered with the forex broker Blueberry Markets, in which if you join the mentorship program, you have and open an account with them, you have the possibility to get the refund credited directly back into your trading account of the mentorship program price. And if you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm. And I will see you in my next video.